Hey guys, what's up? Nick Sean here with Mission FX. Hope you're able to get your chart set up correctly. Again, function button, it's just this relative strength index, okay? So your chart should look like this. However, for the sake of this video, to make things a little bit more clear, I am actually going to go ahead and take off this indicator so that you guys can see the charts a little bit better. Also, a cool thing is once you learn the pattern here at Mission FX, very good, like course over a few weeks, few months, you actually won't even need to have the RSI on your screen. You can just actually have a clean chart like this. Helps you be able to see things better just because you'll be able to recognize the pattern so easily. So yeah, so I typically, you need the RSI to be able to see the pattern and gauge it. However, once you get familiar enough with it, you can take it off and just look at your chart like this, and so it's really cool. So in this video, I'm going to talk about a concept called Elliot waves. It's called the Elliot wave theory. So pretty much this dude back in the day, his last name was Elliot, he came out of the charts and he noticed that a particular market cycle would happen over and over and over again. And it would typically happen with a high accuracy. Now this cycle doesn't always happen, but when it does, it has a very, very high predictability factor for what's going to happen next after you see this pattern. So it is discretionary and it requires a little bit of practice, and it requires you to pay attention to us in the group chat as we're trading live every day so that you can see this happen, right in front of you over and over again. And after a while, you'll be able to get it. So right now, I just want you to kind of sit back, relax, and just, pay attention, watch the video. You may have to watch this video a couple times and just follow along so that you can learn this pattern. It is very, very profitable. It is a very lucrative pattern, especially if you can combine it with the strategy that we teach here at Mission FX. So I'm going to get right into it. Here is the theory behind it. So this dude, Elliot, was like, okay, the market moves in a series of waves. So the market will make an initial move, and then it'll pull back. It'll make another initial move, and pull back. And it'll make a final move before pulling back and sometimes chopping around a bit before turning over, like it did right here. So it consists of 5 quote-unquote waves, or 5 movements, okay? The first wave will be an initial, what's called an impulse. So it'll be an impulse in the initial direction, and then a pullback. So this right here would be wave 1, and then it'll pull back right here to wave 2. Then the market will shoot up again in the initial direction it broke out in. In wave 3, it'll pull back here, and this was wave 4, and then it'll shoot up again to what's called wave 5. And that's it. So the market just goes up, down, up, down, up. So that's going to be 1, 2, 3, 4, 5. Now, a common question I get is, Nick, where do you start? This is where I start. All I do is I wait to see the market in a range. Okay, and by range, I mean the market moving sideways. So this area right here, where the market's kind of tapping around and just going up and down, it's not sure which way it wants to get. And then we see price start stuttering and getting up higher and higher and higher, and it finally broke out of this range right here before pulling back, getting rejected from that area, and going to the upside. After the market breaks out of a range, it'll form waves 1 and 2. And then after that, you'll be able to tell where 3 is, and then 4, and then 5. Okay? So as you're looking at this, all you're doing is waiting for the market to go sideways, waiting for it to break out of that sideways range, and then re-tapping that area, testing it from the outside before getting rejected. This works going up or down, and we'll go through a few more examples as well. So market moved out of this range here. We can see this high right here broke all these previous highs, so it broke out of this range. So the market came down, tapped it before quickly getting rejected upwards. So now you know we have 1, 2. You're always going to know it's 1 and 2 after the fact. You're never going to know during the time it is because it hasn't completed yet. And the market shot up here, forming this 3 before pulling back to 4. And then the market went up again here to 5 before it chopped around for a bit and then ended up turning over, okay? So I'm going to label these on the screen, and I'm going to show you how here on MetaTrader 4. You're going to tap this area right here. If you're on Android, it's right in the middle. You're just going to tap it. If you're on iPhone, just go to the shapes, the objects that you can add to the screen. Click the plus button. You scroll down here to the Elliot motive wave right here, okay? So we're going to tap that. It'll give you the option to tap 5 points on the screen to draw your Elliot wave. So I'm going to do it right here. I'm going to tap where our first one is. That's 1. I'm going to tap the second one. That's 2. And tap the third one. That's 3. Tap this. That's 4. And then tap 5. Okay. And then after you do that, you'll notice they're still highlighted. You can tap any one of these. I'm going to tap 5. and then now it stays planted on the screen. So now you can see all of your Elliott waves drawn out, okay? So remember, all we did, looking back, we just waited for the market to go sideways, break out of that sideways area and retest it before getting rejected away from that range. So it just broke out, tapped, and then jumped. So that's our initial 1, 2, 3, 4, and then 5. Now, Elliott waves move like this. The idea is that once it gets to wave 5, the market should turn over. So if you had predicted the market would reverse after this right here, you could have sold here, 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 anywhere in here, with the understanding that the market is probably going to turn over for a bit. So as the market kept on spiking up, you could have kept getting in on good sell entries, and the market turns over for a bit right here, and you ended up making good profit. So for instance, if you would have sold anywhere up in here in like the 0.7 area, so 153.7, and just held down here to the psychological level, 153.5. This is just a flat round number, same thing as 153.00. That's why I have them highlighted. The market interacts with round numbers really well. And so if you just would have held it right here, that's a good 20 pip movement. If you have a few entries, you could catch 20, 40, 60, 80 pips just off trading this pattern alone. So that's a very high probability pattern. But like I said, it is discretionary and it requires practice. So let's go through another example. You have to wait until this pattern forms in a nice way. Otherwise, it's just it's not going to work very well if you just take any trade as opposed to you waiting for it to complete. So here is another Elliott wave pattern. Right here, we can identify this as the range. The market got rejected right here, came up into this little range, bounced around for a second, and then broke out of it right here, came up, tapped this area before getting rejected. Okay, so if you're asking, Nick, how did you know that was the range? You don't have to be precise about it. All you have to do is you have to understand what's going on. The market is reversing right here because some type of institution, some bank, some hedge fund, a lot of retail traders, they're respecting this level. People are looking at this level. So as you see, price jumps at it, goes up, taps it, comes down, pops up again, then gets rejected quickly at this level before coming down away from it. So we know that this level somewhere in here and this level up here is a level that's respected. So the market isn't going up or down in here, it's just going sideways. Then the market starts moving downwards after this sideways range. So this is our sideways range. As we know, we're not going to know wave 1 and 2 until after the fact. We would have seen this breakout down here really quickly. It goes up and taps this range right here before getting rejected and moving downward. So as like somewhere in here as the market's going downward, you'd be able to tell, okay, this was wave 1 and 2. So I'm going to go over here and we're going to label this with the Elliott motive waves. I'm just going here, I'm going to add this to the chart, Elliott motive wave. So this was 1, and this was 2. Then the market went a lot lower down here to 3, pulled back to 4, and the market moved down here a lot lower to 5, okay? Now, I know some people will probably look and say, Nick, why wouldn't you count this right here as 5? I don't count a wave unless it's moved substantially past the previous levels. So this to this is a clear down and up move, right? That's good. Market moves down here, moves up to here. The distance between this and this is pretty decent, you can tell. But if the market moves down here, it only went barely lower than this, like barely lower than the close of that candle, and the wick came down to here. So this is, I would consider this almost as the same little level. I wouldn't really consider this another wave, like another like wave 5. You want wave 5 to extend, you know what I mean? So this right here, I wouldn't really count that as wave 5. And then we had another pullback. So this was kind of like a little sideways range for a second. We had a clear movement out of that area down here. So that's why I counted this as wave 5. Okay, and as you see right there at wave 5, the market makes a little bit of a correction before running up and then coming down here into a range again. And then we see another one of these patterns break out again. 1, 2, 3, 4, 5. See, this one is the same example, 1, 2, 3, 4, and you could say, well, why isn't this 5? The market moved up. This is like in the same level as this previous wave 3. It's like the same level. The only clear movement out of it was right here to wave 5. So, sorry guys, that's my mom checking in on me and my sister. So, that's how Elliott waves work. You're just waiting for the market to be in a range and then break out of that range. And then you're going to map that out in a series of 5 waves. So we're going to look at this more in the next coming videos and also in the live trade examples. So for now, that's it. That's how you look at Elliott waves. Just wait for the market to break out of a range in 5 movements. So I've showed you an example from the downside, and I've shown you an example to the upside. Okay. If you guys have any questions, always message me or another one of the Mission FX administrators, and we'll help you out. We'll do a one-on-one call, whatever it takes to clear things up. I will see you guys in the next video. Thanks for watching.